Welcome to No Free Lunch, Africa's freshest business and tech podcast with me, your host, Greg Stewart. In today's episode, we're going to be talking exchange-traded funds or ETFs and their growing impact on the local investment market. We've seen a market cap growth of 28% in 2023 and a massive 36% growth in 2024, reaching a total market capitalization of around about 258 billion rand as of June 2025. And with the number of ETFs more than doubling in the last 5 years to around 285 funds currently being traded. And today with me is Gibb, who is the CEO of Prescient Management Company with almost 2 decades of experience in the South African financial services sector, a qualified chartered accountant. She holds a business science finance honors degree from the University of Cape Town. Gibb, welcome to No Free Lunch.
Thank you, Greg.
Starting off with maybe talking a bit about your experience and drawing from your impressive arc of auditing Prescient back in 2007 to being the CEO, leading the company. I think you were appointed in 2023 as CEO. What is one unexpected aha moment along that path that still fuels your passion leading your team today?
I think no 2 days are the same, Greg. So I think definitely the rate of change in both the regulatory environment and the fund environment has just been enormous. So it's been so great to actually be part of that. And I've not had any distinct aha moment, but I think the addition of our ETF offering has been something quite new and something we're really excited about, and really just around the aha moment in some ways. Maybe it's just how these actually can fit so nicely within the framework of or your toolbox of different funds that investment managers can offer their clients.
And let's talk a bit about ETFs. I mean, ETFs have been around for around about 25 years in the South African market. I think they recently celebrated, or you recently had a function where you celebrated 25 years. But it's reshaping investor strategies in the South African, particularly the South African retail investment market, isn't it?
Yes, indeed. So we are very excited. This new chapter really started 2 years ago with the addition of actively managed ETFs. So traditionally in South Africa, you always had passive ETFs, so tracking the benchmark. So your traditional sort of Satrix own the market, whereas these now take that and actually allow you the ability to have almost a traditional unit trust fund, but under the wrapper of an ETF. So for the man on the street to buy them as part of your stockbroking account, you actually now can access a traditional fund in that manner.
And let's talk about the differences between ETFs and unit trusts. Unit trusts have been around for a long, long time and were the mainstay of, I think, most retail investors for a long time. Talk to us a bit about the difference between the two and what separates them.
So the difference comes into, from a regulatory perspective, how they set up is exactly the same. So the difference, so if you've got let's talk about an equity fund. So if I've got an active equity fund, that's a traditional unit trust, and one that's an ETF, they're managed in no different manner in terms of their investment management. The difference comes in really from the operational perspective, because the traditional unit trust, you would go either via list platform or directly, you fill in a form and then you buy into the fund. Whereas an ETF, you would trade like a share. So it's dual regulated, so not just regulated by the FSCA, it's actually regulated by the JSE. So you have to apply to the JSE for approval for this fund to then be listed. And then also prior to that, obviously it has to be approved by the FSCA. So it's dual regulated. And then the difference is how you buy it. So instead of buying it like filling in a form, you would have a stockbroking account and then you would buy it like a share.
And that digitization of the whole purchasing process I think it's also accelerated the adoption of things such as ETFs, with people having much easier access to it on that basis. You offer quite a significant platform in terms of buying and selling ETFs, but you also offer that service to other trading companies, don't you?
So we are essentially, our setup is that we offer it to other investment managers, so not just Prescient. So any investment manager can come to us and facilitate the setting up of the fund, and then the sort of buying and selling takes place via a stockbroker. And then that is either facilitated either directly through your stockbroker or through a trading account such as Easy ETFs or Easy Equities.
And ETFs assets have hit massive amounts of money. The number I've got is something like $1.73 trillion in the global actively managed ETF funds. What strategic risks or opportunities do you see in this growing innovation wave around ETFs, particularly around the fee structures, performance transparency, and so on that you've implemented at Prescient?
So the fee structures would work very similarly to a traditional unit trust. The one sort of point of difference is there's always this misconception that ETFs are cheaper. But that's particularly an index tracker or a passive fund is cheaper because an asset manager is not needing significant IP to track an index. It's so you can offer that in a lot cheaper manner to clients, whereas it would hold true if it costs 1% to manage an ETF versus a traditional unit trust. So it's not any cheaper. So I think there is sometimes a little bit of a misconception there, but ultimately it's still far better value for money than you going and buying a basket of shares. So if you wanting a sort of an actively managed fund that outperforms, say for instance, the Aussie, it's far cheaper to pay an expert to manage that exposure for you. And then similarly for an income fund, instead of if you've got money in your share trading account, an actively managed income ETF is a great solution. So rather than having that money earning some interest in a JSE trustees account, you can park it in an income fund and earn. So that's really what we see as a huge upside. I wouldn't say risks. There's always market risk because these are trading like a share, but those are managed via the correct spreads being put on by the brokers, and we manage that quite tightly with that. And I think the risks are largely alleviated because you've got dual regulation as well. So they're very tightly regulated. So that I think gives investors a large degree of comfort. And there is transparency because either you've got the model of a transparent ETF where the holdings are disclosed every day, or they're non-transparent, but then you have something what we call an INAV, which is an intraday net asset value. That's calculated by an independent third party, and that is continuously being provided to our stockbroker, who puts those prices up on screen.
And ETFs are also actively outpacing things like inflation and so on. So that does provide value despite the fee structure that's involved, isn't it?
Yes. So there's always this argument versus passive versus active, but I think you are buying the expertise of the asset managers, and ultimately you should hope that then outperforms the sort of general passive environment.
So just let's talk a bit about demand for ETFs and how that's shaping portfolios and the construction of portfolios within South Africa. Are there emerging trends, things like ESG or tech-driven? Obviously, a lot of buzz around AI. What are the game changers that you see happening over the next 5 years?
So what we're really seeing for asset managers, either in constructing their fund portfolio or a sort of DFM solution for clients, is the ability to access your global suite of ETFs. So there are something like 14,000 ETFs available globally. So you now have access as a fund manager to that full universe. So you can decide, it's a really great way if you want exposure to, for instance, a particular slice of the Japanese market, you can rather buy an ETF in that rather than trying to stock pick. So it's a very efficient way to get access to certain parts of the market or certain thematic, so a tech-driven or AI-driven. So it's a great way to build a portfolio. And we're seeing, obviously, your selection is increasing in South African markets. So your actively managed ETFs is not, I think there's not even 30 yet in South Africa, but those are increasing. So the more variety that comes online and is listed on the JSE here, the more I think people will use South African ETFs as part of their portfolio building as well. So I think that's what we're really excited about. It offers they're great portfolio building tools, both for people that have private share portfolios or for a fund manager. And then what we're really excited about is the long-term retail investor impact. So how can retail investors now access and buy these? And we're hoping, I think particularly the younger markets where you can pick up your phone and buy and sell these.
Yes.
That's what we're really excited about.
And do you see a bigger uptake in those younger age groups happening in the marketplace?
I think it's still quite slow. I mean, the savings environment in South Africa is just traditionally very slow, very muted. But I think we are seeing those sort of tech platforms like Easy Equities, Easy ETFs, their numbers are growing. I was astounded at the sheer number of crypto accounts that a platform like Luno has.
Yes.
So there's definitely, so that's where we're seeing, I think, a lot of younger investors sort of being influenced and investing. Companies like Luno are starting to offer shares and ultimately will be ETFs. There's the concept of tokenization where you can actually, we'll see that coming through, I think, in funds as a future trend as well. So I think it's using platforms that have got that market share ready. And if it's all on one easy to use platform, I think people will start to use that more.
Yeah, and the nice thing about ETFs is there's such an array of them, isn't it? So you've got ETFs linked to specific commodities, you've got ETFs linked to property. So you've definitely, and as you mentioned, global markets. So there are lots of different opportunities to spread your investments across a wide variety of investment opportunities. And in the history of investing shows that wider spread is a better, lower risk approach to investing, isn't it?
Yes, definitely.
So just in terms of growing the market, how do we encourage more young people to get into investments early? Always the biggest question. Is there opportunity to do financial education projects? And because, as you mentioned, ETFs should really be approached from a longer term perspective rather than a short term gain.
So it is it's definitely an education initiative that it's not just a share you buy in and out. There is a cost to buying any sort of listed asset. So there really should be, and all those funds are long-term investments. So it is sort of encouraging that long-term saving habits. And I think that starts early, that starts at school. So I think I have seen some really sort of great programs coming online in terms of certain foundations working with schools to actually encourage savings and explain how to use money. So I'd love to see more of that. At Prescient Foundation, there are assisting initiatives with some schools, and I'm hoping the more sort of the private sector can get involved in terms of that education, then that will assist. And certainly even from your sort of staff as well. So for large sort of companies to also educate staff, but definitely sort of, I think from your grassroots education is really where that starts to encourage saving at an early age.
Yeah. Wouldn't it be great if the government would enact some policy that says it's obligatory for work starters to save a certain percentage of their salary every month for the first 10 years? Or something like that nature, rather than saying, you can take a third of your pension out and go spend it on whatever. It really is about developing a culture of saying, look down the road, start early, start young. There's a huge wall advertisement in the Gautrain station in Sandton that talks about arrivals are great, but returns are even better. And so, the fact is that looking long-term return and that whole compound interest about companies growing in value really is lacking in the culture in the country. And it's almost like it should be part of their compulsory curriculum. Parents should enforce a savings policy. But it would really be amazing to see that kind of culture start developing, as has happened in other places like Singapore, where youngsters are actively getting involved in savings and investments and buying equities and that sort of thing. It would be wonderful to see that sort of culture be established in our country, wouldn't it?
Yeah, so I would say there's two challenges there. It's getting the right partners to actually go into the schools and encourage that. It is difficult if you look at a lot of your sort of traditional households in South Africa. There probably isn't this culture of you're living sort of hand to mouth each month.
Yes.
So there isn't this culture of savings, or it's not something you would talk about with your parents. So I almost feel like we then have to bring that into schools. And I mean, we'd love to see some sort of education initiative or subject. I mean, that's far more practical advice, and rather than studying geography or history. So we'd love to see more of that in school. So we need sort of government also to come to the party to be able to help offer that in schools. But I think the private sector would also need to really help drive that in terms of going into schools and helping assist to sort of present that and actually make it attractive and interesting for investors. And then I think the greater challenge for us especially is around the regulatory environment and some of the sort of tax uncertainties from National Treasury and SARS around savings. So definitely we'd need more from government to help drive better initiatives to foster the sort of savings industry and grow that. I think we do need the buy-in across government, various sectors to help that.
Yeah, wouldn't it be great if government would approve policy that says we'll incentivize more savings rather than withdrawing your pension fund? Because it does start there. It starts there in terms of saying, let's make it attractive for people and let's educate them as to the long-term benefit of it. Well, we can only hope that there would be some light on the horizon in terms of that. And certainly the ETF industry as a whole provides a great platform for people to get involved and start investing and looking at growing long-term savings. So, Kim, thank you very much for your insights and for the chat. I've thoroughly enjoyed it. And maybe there's something that we should be talking to Prescient and other investment companies about in terms of maybe creating some of those education structures around the country. But perhaps something for a future discussion at another time. Kim, Gibb, thank you so much. It's been great talking to you.
Great. Thanks, Greg.